that being said, we're done with it. Park this over here and get on with it. So let's minimize this and talk about the chart real quick. So first of all, you can see that we've just been going through these consolidation phases. Okay, and the reason why these consolidation phases are important, whether it's ES, NQ, CL, is that you end up with moves like this. See how we had this long, drawn-out consolidation where we're just chopping through here, right? So what CL has done, this is CL that we're looking at. What CL has done is gapped away. It opened up in Asia and basically ran. Here, I'll show you the 5-minute chart so that you can see it. Here is CL. Okay, that's what it looks like during our US session, which is basically gap. It's held the gap and it's consolidating sideways, right? If you look how we opened up in Asia, we'll see. As soon as it downloads it, hopefully I don't have a ton of days loaded on there. I don't, so it loaded pretty quickly. And what you will see, as we pull it in, is that we gapped up. This is Asia, we gapped up. We just kept going all the way into Asia and then all the way through Europe and US session. We've basically traded sideways. It hasn't done anything, right? All night long, pretty much trading in a tight range. So two things. Trading in a tight range isn't great. B, they haven't given up any of the rally, right? So what we'd want to do to figure out if there was really a problem here, so the first thing you want to do is look from the gap point, right, which is this, to the high, which is this. And you want to highlight this area. Notice how that lines up with a retest of the anomaly, and it's the 50-60 back, and it's an old swing high. That's what that red line is at 64.80. I expect responsive buyers if and when we get back into this location, right? And getting underneath here and establishing underneath will bring us back in for a backside test of 64.20. Underneath 64.20 would be a massive failure, right? And I'd expect it to sweep the range again of that balance area. Yet once again, it's done its job. Understand this part right here. When you release the energy through here, it's done its job, right? You've gone through massive days of consolidation. Everyone who was basically shorting or not long in this area came in Asia, right? I don't know what drove that, whether it was the bombings or in Sri Lanka or whatever it was. Something really drove this very, very hard. And then Europe and US have not been able to come up with any significant sellers through here. And what's significant here is if you look, my next naked point of control, TPO point of control, is all the way up at 67.60. This is the natural target at this point, right? So we're either going to get back underneath this anomaly and behind the 50-60 retrace and fail, right? So that's the first clue. Or they're going to consolidate, build more energy, and push again. Now, whether we make it to 67.60 today or to 68, that's a big stretch, right? It's already up well over 100 ticks, right? But that's a natural target. When we go look at this area, I'm going to highlight it to make it easy to find, right? And we go look at the last time we were in here. And I don't actually even want to look from this perspective. Hold on a sec here. Let's go back for a sec. Let's get rid of this. If we go back to, damn, I missed my CL trade. Let's highlight this area right here because we want to see what's in here besides. So we know there's no naked points of control, which means we can trade through here pretty easily in general. First rule of thumb, right? Second rule of thumb is, well, what the hell is in there, right? And we can see this is the area that's highlighted. So we're going back to 11.1 of last year, right? And what we can see in there is that there's a double distribution from 11.1. This is the second distribution within that. And specifically, the volume is built up mostly back in this area. So if I was going to choose an area, I would kind of layer this like light blue in front, but this is really where the resistance sits, right? Then behind that is where your next anomaly, naked volume point of control, and naked TPO point of control sit. So your next target up would be the 66.82 to 66.62. And then underneath that, right, where we're looking, where would be our next logical area, there's really nothing in here for me that I see except for poorly auctioned single prints through here, but I wouldn't want to lean very heavily in that area, right? So I would just simply color that light blue, right? But it kind of goes in phases, the whole thing really from here all the way through here, you really have to consider this whole darn thing one zone, right? So then when you come back and look over here, where did we actually go into? If you look overnight, you can see we're pushing into that first area of resistance. If we get above that, this will be the second area. But understand, this is relatively weak and should be relatively easy to break if we have enough energy. The problem is the size of the stretch. So they may have to build more energy in order to continue the move higher. We went out at approximately 64.70. We're trading at almost 65.70, which is 100. It's actually 64.70, 65.70. Oh, excuse me. I stand corrected. I apologize. We went out at 63.99. So we're at 170 ticks. That's been about 160 ticks. That's been about the range for the day. So we're going to need a range expansion. The biggest days we've had, so we can go back and look here recently. We went from 63 all the way up to 64.20, 120 ticks roughly, right? Same thing here. It's been about 120 ticks has been about the biggest we've had. So to go, hey, we're going to double that range in one day to the upside is unlikely, most likely. And so the better way to address that is to say, look, we're probably going to need to build some energy. And what you'll notice is on a lot of days, what everyone wants is a day like this, right? Where we opened and just drove all the way through the range and closed near the high. And that's a possibility, right? But what's also a pretty high possibility is what you'll notice is on days where we break. So what we want is this, right? We're shooting for this. And it does do this on some days where we close up at the high. I wouldn't want to bet against it. However, keep in mind that sometimes when you break from balance, right, you end up with days like, so this is US session only. And so sometimes you end up, see how this had 2 days of balance? It doesn't close up at the high. Let me see another day. That's actually a pretty damn strong close of balance. But see how we had balance here, broke. It ends up being mostly a balance day instead of continuing through the US session, right? All the way up to drive like it did in Asia. And then you'll see it again here. See how we had a break from balance here? So this was really the break from balance, and see how it came all the way in at the end of the day to close at mid. And it's not unusual to have it do that and still continue higher the following day. So just because we're breaking and breaking to the upside doesn't mean that we will close at the high of the day. We still have to look for our setups, which I'll cover in just a moment. Okay. Mostly what this tells us is, number one, buyers are still in absolute control. There's nothing bearish about this. We're just slowing down in the zone that we should slow down in a bit because we've got to fill in the volume. If you go back and look at those dates back at 11-1, you'll see there was almost no volume put down. So what the market's going to want to do, much to the chagrin of day traders everywhere, is fill in volume, because that's what it's doing, is repairing the chart on the upside. Because that chart, so a chart that's well auctioned looks like this. All right, see how this day has equal volume? So this is the volume profile. Here, I'll stretch this out. Right, this is the volume profile, and this is the TPO profile. You'll notice they're both relatively well filled in. All this is well filled in. Those are healthy looking profiles, right? Unhealthy profiles look like this. Let me find it right there. So see that profile right there? See where it's healthy through here and really unhealthy in both time and in volume on the bottom. That's 4.8, right? So then go back and look to the right in those same areas, and what you'll see is we came back, filled in volume. We come back a little bit further, filled in volume, right? See how we're coming back and repairing all this part. And then when we fill on all that volume, right, and the market goes, oh, we fixed all this. So now this needs to get fixed over here to the left, right? And we come up and we didn't do a very good job. And then last night we simply gapped through it, right? So that's important to know. You go, well, Simon, it didn't fill in volume there. Well, what it'll probably do if and when we come back is it'll come in and it'll fill the volume in this location as well. The market doesn't have to follow a set regimen. It's either doing one of two things. It's either repairing the chart or creating a poorly auctioned chart by releasing energy, one of the two, right? And then it'll switch cycles between filling in the holes and then taking that volume and that time frame out and not filling the holes, right? It'll just trade straight through there. And it's the information that's in the fundamental information in the market plus whatever's going on generally in the market that determines whether we're going to slow grind through an area and punch in the volume, or if we're just going to trade through with leaving very little trail. What you'll also notice through here is, see when it's thin and we're trading fast, we just leave no signature behind, right? But you can already see from how the profile is building here that it's actually putting in a decent amount of volume just in the US session right in this area, right? So usually you would associate, if you think about that again, right? if there's not supply being offered, in a market, right, it should be relatively easy because you could argue, well, good amount of volume's going in and it's not covering very much range. That means there's supply there and it makes sense, right? So if we go back over here to 11.1, right? So the market's telling a story. And the story that it's telling over here in this area was that, so we're going to look a little to the left, right? So see how we went through this long consolidation through here, and then we just punched through. So look at the time profile. So this is the US session, right? So see how volume was good here, volume was good here. We built a lot of energy through here. Energy was released for an attempt to break the balance, closed back into balance, closed under balance, and then we long liquidated, right? We had a double distribution, but you'll notice in the top of this distribution, not very much volume went in, right? So as the market's coming back up, if you think about it, and we looked further to the left, one would assume that someone would think that there was support here. And what you'll notice is this is a naked, I'm going to go light blue as volume point of control here. And people would have thought, hey, there is a reason to buy in here, right? Just like people on the way down always attempt to buy for the rotation back up, right? So you'd have to assume that someone got left behind in this process, right? So those who got left behind go, hey, I got totally nailed through here. I'm long up in this area. I'm long through here. Even if it's on light volume, they got long, right? So if you think about it, they're going to come back in and go, when it gets back over here, right? You know, if you think you bought at 66, it went all the way to 38, right? So you're going to come back over here and you go, hey, I was down 50% almost on my position, right? So when I get back up here, right, this means that we've moved almost off the bottom, right? So if you look off back where the bottom was, which was way back here, we went into the, maybe I'm wrong. Maybe the 30s were prior. I have too much data in there. But either way, at some point, if you went long 66, right, they pushed you all the way down at least to 54. You were down a lot. I think the 38 was probably prior to the 66. And you're going to go, hey, when I get back up here, right, I'm going to start offering out. And that's exactly what they're doing right here is offering out in this area, right, where there was no, specifically there's kind of, if you picture it, there's a border here, which is why these two areas are distinct and why it's kind of stopping in space. There's a border here and there's a border here. And people are going to go, hey, I want to give this stock back to someone else. Let someone else take it. I already took the ride from 65 down to 53. That was no fun. I'm going to offer back out. And then once we run out of people offering, the market should kind of trickle up here and come back into this where more people will offer out. Hence, we know that these are locations where we can attempt a contra if the environment suits it and our intraday setups come, right? And that's why I said through here, if you look, right, which way would I want to lean today? If I had a choice and could only take one way, there's two ways to approach today. You can bet that, hey, we're going to gap and fail, consolidated through Europe. No one in Europe really continued pushing. It was all a short squeeze. And maybe that's true, right? Maybe that's true. But two things. I know a lot of energy got built up in here. B, everyone who shorted the top of this range is now screwed and has to cover. Right? So what do I expect? First time back in here, responsive buyers, right? In other words, betting that the market's going to fail here, trap back in and long liquidate. Could it happen? Yeah, it's about 20% of the time that would happen, right? So if you're going to bet, you're taking a 2 to 8, right? 2 out of 8 times, or excuse me, 2 out of 10 times, 20%, right? You're going to see it do that. 8 out of 10 times, what you're going to see is what happens here, right? It's either going to break and then go into consolidation with an upside bias, or choice B, it's going to continue driving as we did over here, right? And just go day after day after day to the upside, right? So, or choice 3, it's going to fail. I don't like betting on the it's going to fail. That's the exhaustion gap, and it's going to get underneath until I have evidence, right? So then choice B will be we're either going to go into a balance area like this, which is highly likely, right, with a wider range, hopefully. Highly likely that we go into a balance range like this because why? That's what CL's been doing. It's not like exactly rocket science. So from the day of the break, you usually get 1, 2, 3, 4 days has been the average if we look before, right? Attempted break, 1, 2, 3, 4 days, right? And went into balance, but all of those days were a variation on balance, right? Where we could take the edges, push in and out. It didn't drive straight. And then again, when you look up here, right? We broke. And then we went 1, 2, 3 days, and then we went into a balance period again after that. The market just hasn't been ripping straight up. What most people want it to do is a version of this right here. And the market's advertising pretty clearly that what we're going to do is expand energy and then go into balance pretty quickly. right? So we'd have to see a change in that behavior pattern. So I don't want to take the 20% bet that this will fail. I'll know if we trade back underneath 64.80 to get really, really aggressive on the short side if it sets up for a possible long liquidation through here. That's what you need, right? You got to trap back in underneath here to get that long liquidation. Instead, what I'd rather bet on is finding the pushes down, right, and the shifts up to get long on those shifts up for pushes to the upside is what I prefer to do. And what that would look like if you look at it from the 7 range. So guys on YouTube, this is not going to make much sense. It'll make sense to people in the room. Look at each shift up, even overnight, has gotten some sort of follow through, right? Shift up, push, shift up, push, shift up, push. Last one, shift up, push. All of those have a variation, even if you ended up taking a stop right here, right? But particularly when they're coming off of a rotation down. See how this one came at the very peak? And there would have been nothing wrong with taking a stop right here on this trade if you thought it was going to push out, right? The key to all of this, right? The key to all this, entry, stop. And again, I'm not looking for the short side trade. I'm looking for the long side trade, even though the shorts, clearly some of them worked. It's just lower odds, right? If I just keep taking repetitive trades in the direction where I know the demand's already going, the extensions up tend to be much easier, right? And that's true in ES, NQ, and CL. All of it. It's true in all of those. Okay. So what I want to do, right, is trade on the side now. Watch me. Sure as daylight shows up. If intraday we set up with a short pattern and I think it'll long liquidate, will I take the short? Yes. But remember how I'm thinking about that short, right? I'm thinking about that short as in I am a very, very aggressive day trader, right? And I'm willing to take the loss. So how do you, if you're in the room, how do you delineate that, right? And I had a talk with someone I coached this weekend, and I spoke to actually I guess 3 of my clients over the weekend at some point, just in little chats. And I said, here's the deal, right? And what we were talking about was, well, Simon, I saw some setups that I would normally take and I didn't take because you were kind of not taking your trades, right? It was slow and grinding. You didn't want to trade in balance. Okay, so remember, when you're in a room, the challenge to being in a room, right, is that the person leading that room is going to affect your thinking process, right? Therefore, just as I coach y'all all within one-on-one trading and in the room, you have to know what the right trade is for you, what your risk is. I assure you, my risk parameter is probably more aggressive than anyone in this room, except say for Daniel, maybe, right? I'm aggressive in size. I'm aggressive in how quick I'll take a trade, and I'm aggressive in how quick I'll stop taking a trade, and I'm aggressive in how I'll change the pattern that I'm looking for, right? Because it's easy for me to do. I have it, as Bill says, it's my trading skill, right? It's changing quickly with the market. Okay, why do I mention this? Because if you get your setup, and your setup is, let's say your setup is to take every one of these shifts, just you make it simple. Shift, go, shift, go, shift, go. That's what I do. I take them all. I take the stops. I take every setup possible, right? If that's your plan, and I'm sitting here going, I don't like the way it looks, I'm not taking it, right? I want to be clear. I'm not taking it because I don't like the way it looks. That's what I say. Maybe I drank last night and I'm hungover. Maybe I didn't sleep. Maybe whatever it is under the in the sea of possibilities that I don't want to trade, right? If I don't feel good or I don't have the read that I think I should have, I don't trade because I don't like losing my capital. That doesn't mean that you don't have the read or it doesn't fit your risk parameter. Okay, I want to be really, really clear about that. It doesn't mean that you don't have the trade or that you don't have the risk parameter. So take what I say, right? Discount it by a weighting of 20% and go, okay, Simon has taught me one thing in trading and my setup. I'm looking at the market, and for whatever size I trade, I'm pretty comfortable with that setup. He showed me it worked. I've done my back testing, it's worked. And in my trading, it works. All 3 of those things, right? And then you go and you say, okay, something's off with Simon today, or he's not reading it right, or whatever in the world's going on. Like, for example, this week, I'm moving a household, right? So I may have other distractions going on through the course of the week, right, that I normally wouldn't have. For example, I would have liked to have taken this long, and I didn't because I was still getting set up in here, right? And I probably would like to take this long. I'm not going to because I want to finish out what I'm talking about, okay? The whole point, the entirety of that point is this, okay? If I've taught you a setup and it sets up and the market is such, like one of the things I have a problem with is when the market's slow, I have a hard time keeping my focus long enough to manage the trade properly. So I'll pass a lot of time. It's just too much work for me, right? Why do I mention that? Okay. I mention that because if that's your setup, for example, I think this is a valid setup right here. This shift up right here on this pink bar. Now, if we get underneath it and we get underneath this anomaly, it's a different story. We could roll back down. But this should go, right? I'm pretty comfortable with it. It should go at least enough to get a 8 to 10 tick scale and move your risk and manage your risk in case it comes back to stop you, right? So this way you might end up with this, or you might end up with this where it stops you and you have to reset over here, right? Either way, whether I'm trading or not, if you see the setup and it's proper, because I've had multiple people tell me this, just know I have a lot on my plate this week. You look at the trade and go, I think I have the right read on the market, right? I would make that bet because what we're doing is, on our opinion, we're willing to pay the price for our opinion to state it. The way we state it is by expressing it in risk via the contract number of contracts we take and the amount of time we're willing to express the hold on that risk, right? And then, importantly, right, once you've expressed all of that, so I want to say that again, once you've expressed all of that, then you go, I'm willing to pay the price. And the most important quality that I see, right, I want to state this again, the most important quality that I see amongst traders is the ability to hold on to that trade, right, and not let it come back and zap you, right? That's the most important quality that I see in traders, okay? And that is why the ones who move their stops once they take a trade. So if I took this trade right here, this would normally be a trade I would take. I'm fine with that trade right there, okay? And I think we're probably going to bust up to where the resistance zone is. I don't have the chart set up for the zone, this chart set up. I think it's going to bust higher. Why? It's gone through a long consolidation. They've already attempted to sell it down. If they don't get below this swing in the US session, there's nothing to worry about. It's going to push, right? They've already tried to push it underneath here and they failed, right? You can see right here, they attempted to push down and these pushes just had no effect, really making any impact to the downside, right? I want to continue with this. I want to finish this thought process, right? If the guys I see failing or having difficulty putting down P&L are constantly moving their stops and constantly trying to guess whether their trade will work instead of knowing this is my entry, this is my exit, this is my stop, right? And this is the trade I want to stay with, period, end of sentence, right? And because they can't make a commitment to any setup or any trade, they constantly don't make money, right? The other thing that kills day traders is the inability to look at the chart and go, this thing is going to extend by a wide margin and significantly higher, right? And they can't read it, right? They can't look at the chart because they get so stuck on the small version that they want to constantly skip out of that trade for whatever it is that think they're getting paid for, right? And their RR always remains exactly approximately 1-to-1 or less, okay? And they never get the big breaks. So I'm telling you, this area, right, that we're trading in should be able to be traded through on CL to the upside. I don't want to be short unless it fails. And mind you, what does that mean? It means I actually want to see it fail before I go take a trade, right? I want to see it fail. I want to see it get behind this 50 retrace in here. Then I'll be, maybe. And if we get back underneath prior day's high, then I'll go, it's failed. I'm looking for counter rotations up to get short for pushes through that range. But shorts are always easier after the initial failure, right? And there are a lot of work to guess where the failure is going to come from. So my guess is, if I had to take a guess, that we are going to attempt either the 66.40 later today, if I had to guess, right? Or we're going to attempt to the 66.80, one of the two. And it may take all day to do it. It may not go there. It may just grind all the way and be one of those days where it comes back, closes at the mid, and they have no power to the upside. Maybe this exhausted everybody there was to exhaust because there's been clearly no follow-through through the entire European session. So we have to break the peak of that European session to push up through here, right? But what I'm not going to do is bet that this is going to fail until I've seen it fail. Why? Because when I come back over here, right? See, once I see this push over here, if I draw from the base of that push, which was in early Europe, right, to the top of that push, see that 50, 60 retrace right there? See how it held? Once I get underneath that retrace and close underneath, see how it held initially and found responsive buyers. Once it closed underneath, when I go to the right, the shorts became a whole lot easier, right? when I look over here, right, if I'm looking at a push, see this push right here? If I draw it the same 50-60 through here, right, because I'm using it as a rule of thumb, right? So that was the peak. I know I have to get underneath this 62 retrace. Why? Because there's responsive buyers in that 50-60 area for a trade. So then when I go look to the right, right, see how it doesn't get underneath it and it pushes. Now notice when it goes again, I can draw it one more time. Swing low, swing high. There's the 62 retrace right underneath that green line. Look how the shorts become easier underneath. Does it mean the shorts wouldn't work above? No, of course they would work, right? But you just got to know they're going to step back in against it until you've broken those guys. And the way to break those guys is to get behind the 62 retrace. Real simple. And if you relax through it, above that 50 retrace, the longs are easier, the shorts are tougher, and then pick your battle, which one you're good for. I'm good for both sides of that battle because I'm willing to get beat up. I'm pretty flexible. That doesn't mean you are, right? You got to figure out which side of the trade you're willing to take and which punishment you're willing to accept in exchange for that trade, right? Okay, let's go look at ES and NQ. Keep this off to the right. And what I did was added some levels to that, didn't I? So let's go fix that. What is this? Chart number 18. Chart setting number. Ah, there we go. So Y, I have two CLs. Is that what I'm doing? Tick, NQ, ES. And NQ is open drive higher, by the way, guys. So is ES. Why do I have this wrong? Okay, I'll figure it out in just a second. Give me a minute. There's ES. Got it. Now I know what I'm doing wrong. Kill this. There is CL. CL needs, oh no, I know. Give me 1 second, guys. I'm trying to fix one chart here. Okay, we are good to go there. Ah, there we are. Okay, one. Tick is neutral, by the way. Here's ES for the day. Let's get rid of this and go to look at ES profile. Really? That wasn't very impressive right there. 1 second here. I have completely lost. There we go. I don't know how that happened. It's in opposite order, but it's fine. Okay, so right here, CL, let's jump over to ES. There we go. ES. Notice we are one time into the upside. The most important things on this chart to note, okay? Most important things on this chart to note. This is the 50 retrace, right? This area right in here, starting at 2980, okay, 2890, excuse me, all the way back to about 2882. This is the 50-60 from back over here. There's a 50-60 from the gap up to the top. And the second area down here, which is sitting at 2857 down to 2840, covers 17 points of range, right? This area right here, this 50-60 retrace, those are two important areas. Expect responsive buyers in there the first time. I mean, computers and people are hunting that. You'll get a response out of it. Second thing that you'll see very quickly on this chart, right? We're in consolidation, right? Where do you trade consolidations? On the edges. They tend to push back to the middle. What will it look like when this ends? We will gap up. We won't fall back into range, number one, right? Number two, we'll be outside of the prior day's high and low, which we haven't accomplished, right? And number three, the more days we trade through this area, just like in CL, the slipperier the more slippery this will get, which is why people are having such an easy time trading right through this value area because we're all in agreement on price in this location. There's zero disagreement on price at this point. Okay, not one bit. Okay, so that's my 2 cents about that. I don't have a point of view. This is generally where this yellow zone is. This is where the volume build is from Friday. This should serve as generally resistance. We got to get underneath Friday's low, and you can see every single day, exception of one day, closing up at or near the high has been the rule of thumb. I'm going to say that again. Closing up at or near the high has simply been the rule of thumb all the way around. Okay, one day exception to that. Well, and that was actually fairly easy to read because you see we attempted to break, trapped back in the range, swept the range down to the bottom of balance onto the edges, right? And then they retested the old balance area and pushed back in. That's all they did. So I think longs are easier than shorts in ES, right? Doesn't mean shorts can't work. We obviously traded to the short side the other day, and it paid out quite nicely. On Thursday, I think that was we took a short in NQ and a short in ES. But as you can see, had we stuck those positions on Thursday, they pushed it and drove it all the way up to the high, and that is not abnormal. Okay, so that's all I have to say on ES. I'm just looking for it to break the range. We're building energy, and what you'll see here, the other thing that's worth noting, this is an umbrella pattern. See how the umbrella megaphone pattern? See how the range is increasing? So your setups start to give you more and more range on both sides of this. That's a very, very, very productive pattern to trade. Okay, and I would stay very aware that the ranges are increasing on both sides. Give it room on the upside and on the downside to find your setups. And once you get a good setup, try to make it stretch because it's trading both ways very effectively. Okay, let's go look at NQ really quick. Again, there's really been no downside in NQ. NQ profile. Again, you can see in balance, buyers are in control. Most days have closed, almost every day is closed off the low, whether it's at the mid or the high. That's been the rule of thumb for most days, right? And they'll give it up when they're ready to give it up. You'll see it. You'll be like, wow, responsive buying is completely failing, right? And until then, you're looking for long entries. And what are those entries looking like? Let's go cover that really quick. So, getting rid of this, right? Here's ES. What are we looking for? Let's be specific, okay? I'm looking to get above my pushes down, my red speed bars, my shifts to the downside, right? Why? Because they tell me, 1 second, I don't want to screw this up. Why? Because they tell me that sellers are attempting to push lower. I get below my last swing to the downside, right? I get above those guys, right? And if I can get it to be near a shift up, that pushes me above my last group of sellers, which were these guys right here, and it tends to short squeeze up, right? Now, that holds true for downside moves. If you look back to the left in Asia, you'll see this was our last push up right here at the high, right? Closed underneath, long liquidated. So shorts can work, right? It's just the longs are easier at this particular time, particularly during the US session. But the range is expanding. So if you're aggressive, both sides. If you're less aggressive, you're going to look to buy ES long out of consolidations for pushes back to the upside, right? And let's switch this back to US session only. This data, easier to see. And we'll switch to NQ. Same thing on NQ, guys. Same as I coach. What am I looking for? Pushes down, sells, right? Shifts down at the bottom, right? Then I'm looking for where my last push is. Well, here's as far as Delta goes at 8:30. That was my biggest push down of all overnight, right? As soon as we get above that, what's going to happen, right? So they try to push to the short side. They couldn't even break the swing low just prior to the open. Get above it. This is where we get above. Backside test, because remember, what the market's going to do is follow one pattern in a general sense, and then it's going to give you multiple looks onto the variations of that pattern as to how it's going to fulfill that trade, right? So in this particular case, we get above our last group of sellers. Wasn't a very big group, but it was the only group we had, right? They get above them. They backside tested them, right? And then they push. This shift up is what breaks us, right? I probably, frankly, would have been long here, right, with a stop back at the low, or long here with a stop back at this swing low. And then that's what happens when you get over your last seller. So now if I'm looking short, right, I want to show you how that short set up. Thursday, okay? See over here how this is your last group of buyers, right? So granted, you had plenty of short opportunities that you could have gotten from underneath here, but what you'll notice is through one variation or another, we'll color it red so we can see it easier. Okay, through one variation or another. Notice that what you're looking for is the shift. So notice this shift down doesn't get us underneath. You're looking for the shift down that's then followed by either takes place underneath this red line or gets us underneath this red line, either one. So this point or this point, right, is what breaks us. Why is this important? So someone would ask a reasonable question. But Simon, aren't we looking for shifts down on a roll down? Aren't we looking to get behind those shifts? We are. And I would have had just the opposite response. If you closed behind this guy or closed behind this guy, right, or even this guy right here, if you closed above it, I would have expected to push out. If we draw a line above that, we can go to the other side of that, right? Color, red. Now look on the other side of this. Come all the way over here. Notice that as soon as we get above that red line, see how they don't get above, don't get above, don't get above, shift above, forces the short squeeze up to the upside, right? So over here, so right over here, once I get underneath, I know that all these guys are trapped. These guys effectively have a gun to their head because they were late. They were the last ones in. We got underneath. They tried to save it. The shift down underneath this wave is what killed them, right, and forced their hand, and they long liquidated, right? And long liquidation ended up looking like a move. Let's say you took it at the very latest point possible. That's 76.94, and it eventually pushed you all the way down to 76.68. It's a good trade, right? So you're managing both pieces of that puzzle, and what we're integrating more and more is where's our last set of trapped sellers, right? And then where do the shifts come above or below those sellers? And we're letting the computer via the algos express where those sellers are through multiple viewpoints, right? And if you're learning this, right, the easiest way to learn it is to do it one little step at a time, tick by tick, step by step, right? I want to say that again, tick by tick, step by step, right? You are learning to put the pieces together so that you can, for me, it's very easy to see that. I've been doing it a long time. I've been practicing with it, right? But for some people, they're like, I don't get it. If we're above this level here and I get a long signal, you're long. Yes, you're looking for them to shove down and fail to get back into this, right? If you're above and you shove down and you get above it, that's buy pressure. But if you're underneath this, right, and you shove underneath it with a shift, I'm looking to be short. Now, a lot of people would argue, well, you're way late on that break. I would disagree. This is where all the momentum's starting for the push to the downside, right? And in a bear market, this push ends up being extremely large breaks. In a bull market, it's going to push back probably to some variation of a 50-60 retrace on the chart and find responsive buyers. Why? Because that's how it works in a bull market, right? So anyways, that's my 2 cents. Does anyone in the room have any questions? No, that's all right, Bill. No big deal. It's all on me. I just didn't look. I was like, damn, why isn't anyone seeing the link? So we're all good. I have no issue. I think it's going to be a very good week. Monday's usually the narrowest week. This break to the upside on CL is actually generally good for the broader market as a whole. And as you can see, every sell is getting met with responsive buyers. Again, those shifts off those bases above the biggest last sell, right? You'll see there's just no sell pressure off the open at all, right? So now, right, so let me apply what we're looking at. Right now, what do I want to see to be short? The break will come. So now we'll just draw a little line and dot it. So that means if it's dotted, it means it's intercession. I'm looking for the shift underneath that line. That'll trap this group of buyers, right? And perhaps a retest of this area or a break and push to the downside, right? But I want to see my break for my short come underneath here. Or if I'm aggressive, I can look for a setup like a close behind my last shift up, right? But remember, someone's going to try to defend this rotation, right? So I'd rather see it shift underneath and do a half-half or do some variation on my stop and either take it once once with a big stop or twice with two small stops to try to set up the trade. I'll tell you what I'm going to do based on how far we are from the swing, right? But if we shift underneath this level, expect me to be short through here. And where do I expect us to come back in? Expect us to come back and test this bar right here, right? That's also value area low. I believe that is value area low. And the reason I used value area low on that, by the way, was because this was deemed unfair pricing. And we had nothing else down here. I had nothing else to lean on in this area to draw a support resistance level from, right? So you have to get back underneath this to long liquidate, and then your support levels, your true support levels down here, excuse me, on ES at 28.94 down to 28.90, and then that blue area, that's your first major 50-60 area. I expect a response somewhere from this area. There's just not enough sell pressure to really blast through those. Or if we do blast through them, I'll go, oh, I'm going to have to change my outlook on how the market's trading. But right now, every 50-60 that's been met, if you bought there, you've gotten giant swings on ES and NQ. Let's go look at NQ really quick, and we'll do the same analysis. Okay, on NQ, same story. I drew this red line. That, by the way, was that same line where they had difficulty before. Okay. What do I need to get started? Two things. This is my biggest push of the US session and of the overnight session, clearly, right? So I have to get underneath this to break, right? Now, this push right here starts right here. Notice how little economy relative to the delta. So look at how much we got pushed from here. Look how little return we got from this, right? So this starts right here. If I get so see how I'm underneath my last push up? This group of traders right here are, at least hypothetically, trapped, right? If they close underneath it, these guys are going to feel pressure to sell. See that shift down that took place? I want to make sure I get this right. I do. So see how this shift down, right, didn't get us underneath this wave. So the shift down, while important, isn't as important as the shift that takes place underneath here, right? So what do I want to see? I'm underneath my last set of buyers right here. I either want to get the next shift down underneath these guys or the next shift down underneath these guys for a break, retest of the low, and potentially come back in and explore this 76.52 to 76.48. Conversely, see how big a push I'm getting here down to the downside? It's the biggest push all night long. I'm going to take this off of overnight in just a second. See how that's the biggest push since since this Asian push right back here, right? It's the biggest push down. If I get above those guys, I would expect to continue higher. Notice how I'm not making a prediction one way or the other. I'm simply saying what I'm looking for relative to where the delta waves are, right? And then I'm going to adjust my entries, exits, and stops based on whether I think it's a scalp, because in a wide, so we have a narrow rotation right now, right? So in a narrow rotation, I don't want to try to scalp in small waves. But if this is a giant wave, I'll take it off top. If it's a small wave, I'll wait to get underneath and then get my signal to short. And those usually work very, very effectively. Okay. I hope that made sense. I was trying to cover it based on on what I spoke to with various traders over the weekend to understand what I'm looking for. So I'm looking for both scalps and larger rotations, but those larger rotations can only come by getting underneath your last buyers on the short side and over your last sellers on the upside, like we did over here, right? So I'm going to switch this off to the day session only. I'm going to go refill my water, and then I'll be ready to trade. And CL's still pushing. I see zero reason to be short that. And then don't forget the zones in general, right? Like on NQ, they give you a pretty darn good place to put on risk. And that's also important from the larger time frame. And this is what constantly, when I understand it's a lot to put together for most people, right? They're like, well, shit, Simon, you have so many different variations. When you take an overly simplified approach to trading, unless you're swing trading, right? And you go, I'm long above the 50 and I'm out below the 50 or some variation of that. Day trading has complexities because rotation changes and speed changes. And you have to just be able to adapt with it or don't trade it, right? That's one of the two. You have two choices. You don't have to do either one. But that's generally why day trading becomes difficult. You have periods where you make a lot of money and then give it back. All of this is being put together so that we know where the breaks are coming and we know when trading is favorable to our style of trading and when we know when it's not, for example. So look back at CL where I said I go long, right? Remember this back over here, right? Where I said this is a 7 range. I was using a different chart. Hold on 1 second. Still applies. So this was right when I started because this started afterwards. And I said, look at the size of that push right there. It didn't break us underneath our last swing. They attempted below, trapped back in. The top of that swing comes off of this bar right here. See that? That's the top of that swing. We closed above. Remember, we got this combination. I said on that pink bar, I'd want to be long, right? Somewhere right in here. This, I know what it is. It was this shove up right here that I was pointing out. Right here. It was either this one or this one. I forget now, guys. I think it was this one because I started earlier, right? I said on this shove up, I would take that. I'd put my stop underneath here. But it would work the same way, right? Or take this shove up, stop underneath here. These shifts up are important, right? We're above now 2 sets of sellers who attempted lower and have failed, right? And if we can keep above those guys, they have a chance to break the top of the European consolidation, right? Which is this, right? That's what's going to have to get broken on the upside. And if they break that, now you have a chance to run it up into that major resistance area up on top, which I think was 66.40 or 66.70. It is 66.40 to 66.70, excuse me. That'll translate to this area up here, assuming we can break the swing from Asia and Europe, right, prior to the U.S. session open. And I think there's a good chance of it getting up here. I don't know I don't know how you're going to motivate people to sell CL. It's just been running straight up. So who the hell wants to sell it? I know I wouldn't, right? And remember, down days usually come from getting underneath your sellers. Remember, people who are profitable don't have much motivation to sell, right? Especially if they think they just sit there for another couple hours, it's going to be higher than it is now, right? Why should I sell? So you're going to have to get underneath someone who feels trapped and is going to put pressure, right? Losers cause sell pressure, right? Just like on the upside, if you're short, the higher it goes up, the more pressure you feel, the more you're going to be willing to cover that trade, right? Versus when it's in a free fall going, look, it ain't coming back, right? So that's my 2 cents about that. Let me settle down and get focused on what I want to accomplish. But I am looking for the shifts for my entry along with the pink and purple speed bars to set up my trades, right? And as you can see, I don't see why we're not going to come up here and test that 66. Quite frankly, today. Maybe they'll stop it somehow, but I sure don't see how. Anyways, that's my 2 cents. I'll change on a dime if we can get underneath our last big buyers, but so far, no dice on that. And guys on YouTube, thanks for joining. I hope that helped. I know it probably was too technical, but it's all right. It's how we make money, so no big deal. And notice what I'm looking for now. Again, and I will take this, right? I'm looking for a shift down. So see that shift down? I'm looking for my next shift down. And I'll use some variance with a maximum of 10-point stop. So I'll have to figure that out once I see the trade and see how it actually physically sets up, right? So anyways, that's my 2 cents. CL looks like it's on rails. That's all I can say. And the last thing, when I was speaking to Derek this thing, I was like, once it breaks, I would not short it. That's all there's to it. I don't care how good the short setup looks. That is a freaking lot of energy to have built over multiple days to go, I think that's a fadeable trade, right? So and I'm missing one chart, my 7 range. Where do I have it hidden? There you go. Park that over here. There we go. And what I'm going to do is I have a 7 range, but I also have a 5 range, and they both work pretty well. So I'm going to try and meet in the middle on those. I'm going to use the 7 range to see where we've been. I'm going to use the 5 range for some scalps, 7 range for swings. So how I'm going to try and set it up. I can't see the traps on the 7 range. So the springs, excuse me. Anyways, guys on YouTube, thanks for joining. I'll be back tomorrow morning. And unfortunately, I think that was probably confusing as hell, but that's okay. Anyways, have a great day, guys. Trade well. Watch your risk. Okay. And find someone who meets your psychology and your trading style. And don't blow up. It's not worth it. Have a great day, guys.